Hello, thank you everybody for coming. It's a pleasure for me to be here, and I want to thank the organization for having me talking today. Just for the expectations of everybody, if you have come here expecting to learn how to pay less tax, this will not be the case today. uh, in fact, I'll encourage the people who are not paying what they should to pay what they should. But I'll be talking about what we are doing at the tax agency in order to make you pay less tax. Because when somebody who should pay is not paying, the rest of the people are paying for them. So that's why our work is important. It's also important because when there's lots of companies and one of them is not paying their taxes, it has an advantage, a competitive advantage with the rest. They can have lower prices and get a better share of the market. So that's not fair. And when we go against fraud, we make sure that everybody is complying the right way so that there is more justice. I know it's difficult to understand when you need to pay, but it's like that. So the tax agency, the Spanish tax agency, like most of them, we have a twofold mission. In the end, it's collecting tax, but we do it two ways. We help people to pay tax more easily, so we ease people to comply. And we try to find the people who don't comply. We try to find fraud and make them pay. That's all we have to do. And what we do that with data. That's why we are here today, and that's why the objective of my speech today. In the past, tax inspectors would go to the field and go to visit the farmers and see if the crop was good or bad, and then they would decide what they had to pay, and maybe they were hiding something in the barn, and they would try to find it so they could make them pay the tax in grain in that times that they should be paying. But that still can be done. Tax inspectors, in fact, go to factories, go to businesses, and try to find if people are not paying, and they try to find if there's anything in their business that can be a sign of more richness than what was declared. The thing is that going to the business of the people or going to your home and visiting you to know what you're paying and what you should be paying is costly. And we can't do that for all the taxpayers. So what we do is we gather data from many, many different places in order to determine what is the activity. Taxes nowadays, well, tax many, many different things, but most of them are economic things. So we try to track what is happening in the economy, what is happening in each individual economy, to calculate the correct tax. Or determine which is the riskiest people, and in that cases, we go to the premises and try to find out what they are doing wrong, or if our data were not correct, or so forth and so on. So that's more or less how we work. We gather the data from many, many different sources, as I said. Many declarations of the taxpayers. We ask you, what was your crop this year? What was your income? But we also ask banks, we ask other people about you, what were your accounts, your employer, we ask them, what were you paying? We even we interchange information with other administrations, with the labor administration. Even internationally, we interchange data with many bodies. Nowadays, there's lots of interchanges about foreign accounts, about things like what is the composition of groups and how they distribute their benefits, groups of companies, how they distribute the benefits, and many, many other interchanges, in order to know what is the income of people so that we can taxate it, or to know what is their sales so that we can taxate on it. The same for everybody. And if we even go outside to the internet and we try to find other sources of information about what is the activity, the economic activity, things like sales or the flats are being rented on the internet. We track that information in order to determine who are the people who are not complying. It's always the same. We gather data and we analyze it. So that's a thing we've been doing in the tax agency since its creation 25 years ago. And we've been doing it in each time with the technologies that were available. And let me try to go forth, but this doesn't seem to work. No pasa nada. Ah, now. Okay, thank you. So as you can see, I'm showing here a number of users in our organization and the analytic capabilities. As you can see, we have many different systems. The most simple are the ones most used by our tax officials. And in fact, we have more or less even near half of the people in our organization use actively our analytic tools. And when I'm talking about analytic tools, I'm talking about our data warehouse, where we store all the data and where we give that available to everybody in our organization. There, they're able to cross-check information from one taxpayer or group of taxpayers with another, and they can do many, many things with that. What is important is that that data warehouse is I would say, our data lake. From our point of view, is where all the information we have is stored and can be looked by anybody in our organization if they have the rights to look at it. And then, to have being able to create that is based on governance. Oh, I need to go back. Governance of information. We need to have the right security, because 10,000 people accessing this data, if we don't have the right security to be sure that each one accesses the right information, then we would be publicly disclosing information that is of each individual, and it will have trouble for us. We also need to have, of course, quality in the data, otherwise, and we've been working very hard to have quality in our data, in all our data sources. We work hard for that. We need this data to be understood by the organization. We don't have this data mixed up in the data lake where nobody knows what, and we only need some specialists that can understand the data. It's all tagged so people in the business side, these 10,000 users, more than 10,000 users, are able to understand each piece of data and cross it with anybody, do any aggregation, do anything they like with that. And we also have that integrated with our operational systems so that you can operate from the analytic systems to the operational, and you can select a group of taxpayers and do something to them, send them a letter, or initiate any procedure for the seizure of their income or anything. And also, there in that system, we have all the complete sources of information. So anybody who looks there has nowhere else to look in our organization. That's important for us, because they can cross-check anything. And cross-checks are very important for us. Why? It's a very simple way of analyzing information, but when we go for more advanced analytics, we find something, and it's that it's difficult to explain the results, not just to our officials, but to society. And I'll explain a little bit more the case. When you have a cross-check and you're saying, I have to pay because my income was 10,000, and your company says, no, you earned 12,000. It's very simple. We just have the figure. Your income was 12,000. Your company is telling me that it paid you 12,000. So there's no use in complaining about it. We know it. Check with him if you like. But this is a source of information that we can use. That's very simple. But if we run a complex model in order to determine that maybe you're paying less than you should, then maybe we could have that some elements of risk are that you are older than something, you're living in some place, but all of that things don't determine truly the income. They only have a probability. Then you can't go to court in case that you decide to complain about what we are designing. You would go to court and say, hey, my income is only 10,000. They are saying it's more, but they didn't demonstrate anything. And it's difficult to go to court and say, our models with a 99% of probability are saying that you should be paying more. It's not enough. The judge will try to understand the models, and if the models are very complex, he will say, I don't understand, so why should I trust you? So that's the reason why we need sometimes simpler systems. In the case, with all these sources of information in the past, what we've been doing is using them for many things, but the most known, well-known by everybody who is in the society in Spain is income tax, personal income tax. You know, in the beginning, we used the internet for people to provide us the information. But then when we were able to collect information from different sources, from the banks, from the companies, about the salaries they were paying, we were able to compose your declaration. So we draft a declaration, and each taxpayer decides whether that declaration is correct or not, and he can, well, change minor things or big things if there's big things to change. But more or less, we have all the information. We have the loans, we have the salaries, we have the pensions. We put all that together, and we are very, very precise in determining this income tax. What is happening that most of the taxes then rely on workers for companies. And the thing is that when you try to do that for companies, the problem is that the sources of information to determine the income of a individual are limited. It's your company, but it's limited. When you try to understand what is the economic activity of a company, you need more. You need to know, because it has many, many operations. One year, maybe it sells a lot, in summer, because it was a high season. Next year, it's different. And their income comes from many different places. One is from customers. The other has to do with some inversion they made somewhere. It's complex. We need to look at their accounting in order to understand what is their economic activity to really determine what was happening. And we do so, but in order to go into their accounting, we need to select which are the companies that are more risky and go to their premises and decide to get their accounting, get into their systems, load that into our analytic systems, compare it with the rest of the information we have, and after that, decide which were the correct amounts that should have been declared. But that is costly if you have to do it company by company. So it would be better if we would be able to determine what is happening in each company massively, the same as we do for individuals. And that's why we started a project, this one, SII, in order to collect information about invoicing between companies. Okay. The problem with this is in collecting all the invoices from all the companies means a lot of data. So when we started to think about this, because if we had all the invoices between companies, we could know which is in real time, which is the activity, the economic activity of each company. And then it would give us much more information about what they're doing, and we would be able to do two things. On the one hand, we would be able to help them comply, the same as we do for individual taxpayers. We want to make a draft declaration so that they don't need to calculate if we have enough data. And the other thing is that we are able to see if what they are declaring is correct or not, because we have the information from all the companies. But the thing is that that's big data in this case, because we are talking about many millions, thousands of millions of invoices per year. And we need to analyze them. We need to analyze them in order to know what is being done and to be able to draft these declarations. So when we started this project, we decided we needed to set up a new infrastructure which would be able to deal with all this data, and that's what we did. Here you see, well, we started this project maybe around 2 years ago, and it ran live this summer. And we are now receiving from the big companies around 80% of what we've estimated, around 80% of the total invoicing that is being produced in the country. So it's working quite well, and we are calculating risks, and we are able to determine in which cases VAT declarations are more risky based on the information we're receiving from this. And still, we are advancing more analytics on this information because it's very rich, and it's in real time. So we can act in the moment anything is happening. Not in the past, when we had one declaration per month or per year. We had to wait the end of the year, and maybe the company that was making fraud had disappeared, and we couldn't go for the assets. Okay, so it's important. So we started really thinking from a, I would say, bigger data perspective than in the past. Because of this project, we had some data entities which were large, tens of thousands of millions of records. But we could use the infrastructure we had in the past, based on Kalman-oriented databases, to deliver results with that. But we needed to deploy some extra infrastructure with Hadoop and all the rest to make better analytics in this case. But when we set up this infrastructure, what we found out is that we could use it for other things. So we started to think what we could use it for. And a project which was disruptive for us was this one, calculating the indirect participation in companies. In the past, people hid their grain, the crop, somewhere else out of the barn so that the tax inspector would go there and would not find the money. But nowadays, people don't do that. They set a company, and that company owns another company, and that company owns even another company, so forth and so on. And after some hops, there's the company with the assets, a company, very rich company, which is paying for your house, is paying for your car, for the people working for you. And you own nothing. You own a company which is poor, because only in the chain is when the big company appears. It's a way of hiding your income and your assets. So the problem is, you can analyze one taxpayer. It's simple. You create a network on the relationships we have about the ownership of companies. We create a network, and it's easy to find for one individual. But when you try to do this exercise for the whole set of taxpayers and the whole set of companies in the country, then the problem gets big. And then it's where we benefited from our big data infrastructure in order to be able to calculate this for all the people and for the companies with a lot of steps. So now we have all the indirect relationships, who owns which percentage of which company for everybody in Spain. Not only that, we are able to calculate more or less which are the assets of these companies and of the taxpayers, so we are able to evaluate which is the richness of the people. So we are using this to be able to detect fraud, and in the past it was impossible before we had this kind of infrastructure. As you can see, we use these results for many things in two ways. One way is to detect fraud, but the other thing is that some people don't want to pay. Even if they have declared or we've calculated what they need to pay, they say they have nothing. Even if they live in luxury and say, I own nothing, it's nothing, it belongs to me. But when we have these indirect calculations, we can see that he doesn't own anything which is valuable in a direct way. But after some steps, or maybe through someone who is related to them, we're going to find the assets. And these assets, really, legally, it's unclear whether they belong to him or not. But we can find them. And we can collect this tax that he was not wanting to pay. Well, there's still another project in which we use this infrastructure, and it's related with unstructured information. When we deal with information, we have a long history, and we try to have structured information. When we have a problem and we receive unstructured data, as we are able to determine the conditions in which data is sent to us, we try to ensure that it's sent to us with quality and in a way that we don't need to do anything with it, because it's already structured and we know how to deal with it. But in some cases, we have unstructured. In fact, we have lots of things. We have hundreds of thousands of documents we receive daily from taxpayers, which are saying to us different things. They comply, they are clarifying anything. They are asking for some clarification, for some benefit, anything, and maybe they write a letter. Or maybe it's even our activity. Some of the tax auditors, maybe they write things they do, and they have to explain to the judge or even to the taxpayer, you did this wrong, this is how we are calculating the tax you need to pay, and we've used this information and all that. That's plain text. Then with that plain text, we started long ago a project in order to be able to, of course, when there's images, make optical recognition of the text. And after that, we'll, of course, index the information so that people can search on that and search for entities and classify information and all those kind of things in order to provide individual tax auditors with information, but not only that, but also to provide with automation. In some cases, we can use this information automatically to classify the information we're receiving from taxpayers, imagine, to classify who we send it to, things like that. The thing is that, well, the volume of information is big. In the beginning, we were doing this with the, I would say, most important sets of information. And what we're doing is we are scaling up this using the big data infrastructure. So again, it's a different use. It's more common. You'll be, I think, seeing many more of this in the next 2 days. But, well, it's another of our uses of big data. And we don't have so many other cases of big data because really we aren't in the Internet of Things. We monitor activity, but each time we ask for information, the thing is that we need to be prudent, I would say, because we can't charge the taxpayer with more burden in delivering us more data. So each time we ask for more data, we have to give a lot of explanation to society of why we are collecting this information and how we are going to use it. Okay. So I'll change now and I'll talk about how we use some advanced analytic techniques in our activity. I was talking some minutes ago, I was saying that we use cross-checks a lot, and that simple analytics gives great value for us. And it's simple to explain. Imagine we know that you own, we know it, because we have information about the owners of the cars in the country. You know you own a Ferrari, that you live here around, somewhere in La Finca or something like that, and you say that you are poor. It's just a cross-check. You say that you have no income. Well, it's easy to find that. You don't need any advanced analytics to see that people may have a risk. But there are cases in which advanced analytics provide us with better insight of what is happening. And I'll talk about, you may think that predictive analytics, supervised models would be more interesting than descriptive analytics. But I would say it's not so clear. And the reasons, I would say there are two reasons. One thing is that we don't have so many cases with which we can train our models to find fraud. You say, well, people come to us and say, you could use, if you have the cases in which you found fraud, imagine in VAT, then you can train your model and then you would find some more fraud cases. But it's not as easy as that. We don't have so many cases for the variety of causes of fraud. That is one thing. The other thing is that we usually look for fraud in the cases we know. But what about what we don't know we don't know? For banks, for telephone companies, when there's fraud, they know that later on they will have information from the holder of the bank account or from the owner of the telephone who will be telling them that the fraud happened. They were not fast enough to detect it, but in the end, they will know about it, and they can train a model to detect it earlier. The thing is that when fraud in the tax world happens, if it's undetected, maybe we will not ever know about it, so we'll not be able to train a model with that cases we didn't identify. So, in some cases, we use this supervised models, even to detect fraud. But in many cases, we use them to, or in some cases, we use them to make a model of what our officials, tax officials, are doing. Many of the decisions in the tax agency are automatic, but not all of them. Then, many decisions still rely on tax auditors who are supposed to have more information about the case and can make a decision. Imagine you ask for a benefit, or maybe just you want the refund of some tax you paid too much, and VAT is an example. Then you ask for something, and when there's a rule, a clear rule, we automate that. That's very clear, and it's also very equal for everybody. But in some cases, there's not a clear rule, so the decision is sent to an auditor. Then the thing is that he decides, but mostly he decides with information that is in the system. Because what else can he look at? He can go to the premises of the taxpayer. In most cases, he can't. So he can know where he's living, or maybe what the company looks like, or things like that, in order to give him the benefit or not. But the thing is, he doesn't have more information that is in the system. So in fact, what is happening is he's looking at our system and deciding. And what we do is, well, instead of letting him decide, we look at the decisions they've made, look at the data in our system, and train a model in order to decide the same way as the set of tax auditors are doing. And with these models, we then can automate the decisions of the system. In the end, the most complex decisions, or the cases in which the data is not enough to decide, maybe he has to look somewhere else. But in all the cases where the data is relevant for the decision, we can automate that, and we do it with this kind of models. And the other set is trying to find anomalies in the data. For example, in the cases of networks, as you can see in the right side of the screen. And things like, well, you're trading with companies, but you are you're a network inside the whole set of taxpayers, and you constitute a network in which the properties of how you connect with the rest of the companies that are working with you is quite a different pattern from the rest. So we can look at that, because maybe there's fraud there. And in fact, doing things like that, we find fraud. The thing is that in these cases, the problem is to determine which is the fraud and which is not. Because many abnormalities in the way people do things, in the economic activity, have to do with evading tax. But people do very odd things because of many different reasons. Some legal and some not legal. Sometimes people do things that you can't explain unless you look at the case. So we need, in order to improve these kind of models, to look at lots of cases before we can be more or less sure that we are aiming to the right target. And that's the problem you have in this kind of models. Have this network there, a simpler one, in which what we have is the red dots are rich people, the green dot is one who is supposed to be so poor that he owes us maybe millions of euros, and in the middle are companies or people who are connected to him, maybe people who are their family, maybe companies in which he has some participation, things like that. Then it's easy to find this. After that, you have to investigate the case, but looking at the data, we can find these kind of things and go for the fraudsters. So that's the kind of things we do. And what are the results we get? Well, you may think that you know lots of people who commit fraud, and maybe it's true. Maybe it's not so true, because one thing is fraud, the other thing is that you are paying less because the law lets you pay less. That's different, that's not fraud. You can complain to the politicians, not to the tax agency, that your neighbor pays less tax than you, because if it's legal, it's okay. But here's in this graph, you can see the difference between the VAT that is calculated, should be paid in a country, against what it is paid. It's being calculated for the European Union. Of course, methodology can be discussed, and maybe it's not the only image you can have about VAT, but well, it's independent. And what you can see is that we are not in such a bad position. Yes, is Spain compared with the rest of the country in the European Union. More than that, you can see that we improve from one year to the other. And we'll continue improving until there's still fraud. The other graph I like to show you as a result of what we do with data is this. Administrative costs of tax authorities, a comparison between European countries again. And again, you can see Spain has a little lower costs. And it has lower costs than any other, well, than most of the other European administrations because we use data intensively. And that's what we do. Thank you for your attention.